Yes. Yeah. So then we want to start right away. So you want to pass a FR stroke AFR in August, come and get the secret. So these leaders are very, very important. We need to really get them clearly. Are you using our app? If not, then you need to search RCM Online College on the Play Store or App Store and download it today. Download it today. All right. So you're going straight away to Lisa's IFRS 16 AFRA question, which applies to FR as well. So this is an AFRA question that applies to financial reporting. So this December 2024, question number 5. December 2024, question number 5. So for the financial reporting student, you don't have to get it. You don't have the question, but you can easily go through this. So are there students who have already downloaded our application? Are there students who have already downloaded our application? Are you using it? Is it user-friendly? Great. Great. At least I can see Millicent is using it. Great, great. Everybody should be able to have access to that application. It's going to be a game changer. It shall be a game changer. So there, the question is, question number 5, I'm reading it. On 1st July 2020, Mariana Manufacturers entered into a 4-year lease of factory equipment from a supplier. They leased factory equipment from a supplier. So automatically, Mariana, the one who leases, becomes who? The lessee. The lessee. All right. The annual lease payment is 2662, was payable at the beginning of each year, starting on 1st July 2020. At the inception of the lease, the factory equipment remaining economic useful life was 7 years, and the lease contract contained a bargain purchase option, which was reasonably certain to be exercised at the expiry of the lease term. The interest rate implicit in the lease was determined at 10% per year. The initial direct cost incurred by Mariana Manufacturers at the beginning of the lease amounted to $280,000, with suitable calculations demonstrate the accounting treatment of the above lease transactions in the financial statements of Mariana Manufacturers, the lessee, for the years ended 30th June 21, 22, 23, 24. They're giving us 6 months. So you'll allow Mwalimu, we have about 10 minutes to go through this IFRS 16. What is a lease? A lease is a contract that gives the lessee, who is the user of this asset, the right to use, the right to use an identified asset. The asset must be identifiable for a specified period in exchange for lease payments. All right. Parties involved, we have the lessee who uses the asset, and then we have the lessor who owns the asset. Lessor who owns the asset. What does the IFRS 16 require? A lessee must recognize the right of usage, the right to use this asset. You see, ladies and gentlemen, any asset, if you remember very, very well, an asset will always be that resource which has got what we call future economic benefits here. There must be some economic benefits which will flow from this particular resource to the owner or to the person who is using this resource. For example, at RCM College here, ladies and gentlemen, we have leased this space. Like today, I'm teaching from this room. All right. You see, it is something we have rented. Somebody may argue out and tell you that that cannot be an asset in your books. According to IFRS 16, you have the right of using this asset. Even the lessor cannot interfere. So long as I'm making my rental payments, my lease payments, Even this lessor cannot interfere whatsoever. And that is why, ladies and gentlemen, even if you are a leasee, you must acknowledge that you have an asset which you will be able to draw economic benefits from. For example, through this lease space here, now we are able to get fees from our students. We are benefiting here. And then immediately, remember this lease, like at RCM, our leases are 5 years, 3 months. And you'll get, for example, the total rent being like 800 to 900,000. All the buildings you have leased per month. We are not that rich. We can't pay this 800,000 per month for all the 5 years at once. But you see, somebody has given you the asset to use. So then automatically, you should be able to recognize a lease liability for all these years. A lease liability. This means most leases should appear on the statement of financial position, we shall be having on the asset side, on the statement of financial position, asset side, we shall have an asset and a lease called right of use. Initial measurement. How do we initially measure this lease? We must measure what we call the lease liability, where you measure this lease liability at the present value of future lease payments. And the lease liability will be the present value of the lease what year? The lease payments. Initially, you must also be able to evaluate what we call the right of use. So for us to be able to understand what Mwalimu is talking about, I would want us to read this question, and then we, first of all, do the initial recognition. So you're told on 1st July 2020, Mariana Manufacturers entered into a 4-year lease of a factory equipment from a supplier. The annual lease rental is 2662,000, which was payable at the beginning of each year. This semester, the examiner was able to catch students. Students are normally used to what we call annuity in arrears. Students are normally used to what we call annuity in arrears. Now here they brought annuity in advance, or what we call annuity due. Not many students were able to get this present valuation. All right. So then I would want to give you a minute. How many are we, by the way? 105. I would want to give you, great students of mine, a minute. Try to see whether you could be at a position. You could be at a position of giving us this lease liability, because the first thing you do is to give us the lease liability. Lease liability, which will be the present value of lease payments. Present value of lease payments. Present value of lease payments. All right. So remember, my very good students, we are supposed to remember these. The lease rentals to be paid at 2662,000. They've told us that this lease is a 4-year lease. And the cost of capital given here is 10%. The cost of capital given there is 10%. So now I want you to give me, ladies and gentlemen, this present value of the total liability. Total liability, present value. I would want to give you 3 minutes. Let's see whether you'll be able to pin this down. I've given you everything that you need. I've given you everything that you need. I've given you everything that you need there. I simply want you to, anybody who has a suggested answer, please feel free. Anybody who has a suggested answer, please. Uh, 90? Oh, 6620. Let me also hear from the others. What are the others saying about the total present value? About the total present value. I would want us to be very clear with this. We shall be very clear with this, because the moment you get this right, then automatically, you are a very, very good student. And even if you don't get it right, but you've tried, you're still a very good student, because this life is all about trying. This life is all about trying. I show the formula. I'll be able to show the formula. Before I show it, I want you to try the 𝐬𝐭𝐮𝐝𝐞𝐬 6620. So if you got 6620, can you kindly raise up a red pen and put around there? You've tried. I appreciate your effort. But please pick it. Do you have a red pen? Pick a red pen. Where is it? Yeah. Pick it up and please put a big wrong on yourself. Is there somebody who got a different figure other than 6620? And that was the correct figure. Yes. That was the correct figure. So then thank you very much for trying. Would you want Mwalimu to do it now? Are you ready for Mwalimu to do it? Are you ready for Mwalimu to do this? Are they ready for Mwalimu to do this? They are not talking to me. All right. Thank you so much for trying. All of you are winners. All of you are winners. All of you are winning. So remember, we have, ladies and gentlemen, what do we have here? What we have here, what have they given us? They have given us the lease term. We have a lease term over how many years? 4 years. We have an annuity, which is due at the beginning of each year of shillings 26,62,000, isn't it? Then we have the implicit interest rate, which will be our cost of capital. Our cost of capital, which is what year? 10%, isn't it? 10%. Yeah, we can't use the economic life here 7 years. No, that one will come when we are calculating depreciation. We shall use 4 years. We shall use 4 years because this is a 4-year lease. It's a 4-year lease. Now, when the annuity, so the total present value will be the annuity that we have. Because it's an annuity, we multiply this with the PVFA to take advantage of the concept of it being due in advance. We shall multiply it with 1 plus R. Yeah, because the annuity, this is annuity due. Annuity at the beginning. So we qualify it up by putting there 1 plus R. Then remember, you are good students of finance. You know that to get present value interest factor of an annuity, we normally take 1 plus R raised to negative what here? N. Present value interest factor, just like that, PV if I mean, for irregular amounts. And then to get PV for like this semester, the examiner never gave us these numbers. The examiner wanted students who had the powers of cramming this, who came up with these formulas from their heads. So PVFA will be 1 minus this molar formula raised to negative n. And then we divide everything by what here? By R. We divide everything by R. So then this one here will be 1 minus 1.1. I hope you're able to see the 1.1 where it's coming from. Because you see R is 10%, so this 0.1. So 1 plus 0.1. Raised to negative how many years? 4 years. All right. All over what year somebody R, which is what year somebody? 0.1. So then is there somebody who can give me this particular figure in 4 decimal places? Present value interest factor of an annuity. This is an annuity because we are paying our lease rentals, yeah, uniformly. 3.1699. Is there any online student who is getting that figure? Thank you so much. Thank you so much. And therefore, ladies and gentlemen, and therefore, our total present value will be the 2662, times our PV that you guys got as 3.1699 times our 1 plus R. Our 1 plus R. Why are we multiplying with this 1 plus R? It's due. It's being paid in advance. If it was in arrears, then the 1 plus R would not have been there. So then what figure are we getting there now, my friends? 70, 92, 82, 100, Is that figure being given to us also by the online students? If there are no rounding offs, of course, we should get 1,000 there. If there are no rounding offs, we should get 92. If there are no rounding offs, we should get 82,000. But of course, even if you use the figure that you have in your calculator there is no problem. So, that will confuse you. The one that I would have bought is this one here, method 2. That one will confuse you. Method 2, somebody can come and treat this. So you say that the first year is 26,62,000. That is the first payment you make, isn't it? And then the second payment you make, you see the first payment you make, you're making at time 0. So no discounting, right? So you come and pick the second figure here. Now for the end of year 1. So you have done time 0, you have paid. Then end of year 1, we pay. So you come and multiply these with 1.1 raised to -1. That's discounting. You treat these figures as if they are what independent. So you come and they say plus 26,62,000 times 1.1 raised to -2 plus 26,62,000 times 1.1 raised to -3. I hope that we've been able to, I hope that way we've been able to make our 4 payments. 1, 2, 3, 4. You can do it this way, and then you treat these as if they are lump sums, as if they are irregular. So use PV to discount. Use 1 plus R raised to n to discount. This way you'll be able to get that 98, 92, I mean. Can somebody in this case here confirm that we're getting the same answer? So remember, the first figure is not being discounted, because you are paying that today. The first figure we are not discounting because you are paying that today. And then that will have taken care of our 4 installments. That will have taken care of our 4 installments. Why do I feel that today I have somebody who is not doing anything at the background there? Some of my students who are online, even punching the calculator now, today they are not punching. See? We are so much here. Wow. Great. Great. Saying the same. Osman is saying the same. Ikiwa flat vizuri, haina hiyo mambo mbaya, because hapa kuna rounding off, isn't it? So then let me first of all get feedback, especially from this one. These guys, have they learned something there? Yeah, Daisy, I see your question, but the very best will be what we have just done here. To demonstrate that you know the concept of annuity, to do it the way I've done it here. That is how you'll be able to remember. So I'm taking feedback from my online students. Have you been able to follow the online students before I continue? Have you been able to follow? Yeah. So nobody has a question. Thank you so much. Thank you so much. Thank you so much. Nobody has a question. And then, of course, the students who are following me on YouTube, kindly, my YouTube, and the ones who are here, my YouTube is Joshua Aura. Yeah, and ensure that you are subscribing. Give me that one subscription. Give me some love there. I mean, we are doing this today for you for free, isn't it? So you need to love that thing like that. That's how this video will be able to reach so many people. All right. Now we continue. So then that is the first step of our initial recognition. Now we know our lease liability. So remember, lease liability equals total what year? Present value of the lease rentals. That we have done. Step number 2, give us the right of what year? usage. Give us ROU. So go to the second step. Give us right of use. Right of use. Now remember that this is an asset which will be recognized in the book, the books there. So the right of usage, you give us all the expenses, all expenses. Yeah, paid. IFRS 16 tells us preferably these should be direct expenses. Direct expenses. And these direct expenses are which ones here? Number one, we have our lease rental. See, that's it's an expense. So because it's an expense, ladies and gentlemen, and you have not paid it, all right? So we have our right of use from the very beginning, times 0. Our right of use will be equal to the lease payments. And this has to be the total present value. That is the first expenditure, isn't it? Is your first expenditure. So the total present value, which is our lease liability that I'm able to see there, ladies and gentlemen, equals what here? 92 what here, somebody? 92,82,000. In this question, do we have any initial direct cost? Initial. That expense paid at time 0. Initial direct costs. Like the legal fees paid at time 0, isn't it? Yeah, legal fee paid at time 0. Remember, for the lease payments, we take this as time 0 expenses because ideally, if you had the money, you should have paid for the entire. Yeah, immediately. That's why we are discounting, bringing it to today. So the initial direct cost, how much am I able to see there? 280,000? 280,000. So come here and they give me the ROU, the right of usage. Now the assets. Mnasema 90? 62. 95, 62,000, eh? Yeah. All right. Thank you so much. Of course, now we have an asset. We know that the third step will be to depreciate. Depreciation. So give me the annual depreciation. Oh, by the way, I should have asked a very, very good question. You know, if it's a question you guys have done in the class, I should not repeat this. Have you done this in class? How do you do it? Have you done it in the class so that I don't repeat this? So I don't repeat what you guys have done in class. They have done it, you can see yes. They have done it in class. Okay. No, they're saying no, isn't it? So then come here and give us depreciation. So depreciation, that's annual, annual depreciation. I mean, even if you've not done it, I will be able to give you another perspective which can assist, isn't it? So annual depreciation. So you see here, we need to know the effective number of years, number of years. So they have given us, in this case here, the lease term versus the economic life. So the lease term is 4 years. Economic life, they have given us how many years? 7 years. 7 years. If you, let me just go back here. Let me go back to the question. So you see the lease life. The lease life here is 4 years. Lease life is 4 years. 4-year lease. And then the factory equipment remaining economic useful life is what here, somebody? 7 years. Ordinarily, I'm supposed to compare between the two. Ordinarily, I should compare between the two to know the number of years I will use for depreciation. I should compare between the two and work with the lower, ordinarily. But if I'm certain the asset will be transferred to me permanently, whenever I'm certain that the asset will be transferred to me permanently, then I should always use the economic life. Economic life. And I know you have notes of this nature. Let me just portray something here. Let me portray something here. So depreciation, if ownership transfers or a purchase option is reasonably certain, depreciate over the useful life of what? Somebody, the asset. If ownership does not transfer, depreciate over the shorter of lease term or what? Somebody, useful life. I repeat, this one confuses so many students. You can easily get a 0 for depreciation. If I'm told that this asset will become mine, then I should be able to depreciate it over the useful life. But if this asset will not become mine, there is no purchase option that is given, then depreciation will be over the shorter I'm given. If ownership does not transfer, depreciate over the shorter of lease term, for or useful life 7. So in that case, I would have picked what? Somebody 4. If ownership is not to be transferred to me, who is the lessee? All right. Now, ladies and gentlemen, this is where we are in this question. We are told here, at the contract, at the inception of the lease, the factory's equipment remained economic useful life for 7 years. And the lease contract contained a bargain purchase option. The lease contract contained a bargain purchase option, which was reasonably certain to be done what? Somebody exercised at expiry of the lease term. So that means that for depreciation, I will use the economic life. I will use 7 years. So use 7 years. So remember, these are a number of years to be used. So use 7 years. Pause. There is an option to purchase. There is an option to purchase. And therefore, depreciation per annum will be equal to, you take the ROU figure you have. This one here. Don't depreciate the liability. You take the ROU figure that you have, 9562,000. You divide this by how many years? 7 years. Which then will give us what figure? 13. I saw somebody who got this right. 1366,000. So first of all, I want again to take a little bit of a slight pause and ask whether my online students are following. Have they been able to follow up where Mwalimu is? Have they followed? They're okay. They're saying they're okay. Thank you so much. Great. Thank you so much. I'm almost finishing. After that, ladies and gentlemen, you shall now go to the loan amortization schedule. Because basically, the landlord has given you a loan. So you give us a loan amortization schedule. Which is the lease liability schedule. Lease liability schedule. All right. So then you shall be able to have here, we have opening balance. Always charge interest on the opening balance. Give us our installment. Give us our principal. Give us our closing. Its principal here supposed to be with LE or with AL, and also age is catching up. When you want to know that age has started catching up, is when you start missing those spellings. And it will be bad for me to pretend. I would rather learn again from using it. Is it supposed to be A-L or L-E? Principle. It's good this way because you want to please Mwalimu. It's okay that way, right? All right, no worries. Nobody's coming to mark our grammar. Yeah, nobody's coming to mark our grammar. Yeah. Yeah, Mwalimu kama mimi. Thank you so much. All right. Hapo umenipatia tofauti sasa how. Principal. Yes. Thank you so much. So let me know once you're able to finish drawing this structure because I want to get started. Have they finished? Done. Thank you very much. So what is the first year? If you look at the question, the very first year given here is July 2020. I want to put the dates. So we have 2020. So what is the opening balance? Remember our lease liability. Our lease liability was what year, somebody? 92? 82,000, isn't it? But remember we paid in advance. We paid in advance. So it comes to the opening balance. If it's an annuity to you, take this 92. 92 what year, somebody? 82. Right? Minus what you were able to pay in advance, which was? The installment is 62,000, isn't it? So please give me this amount. Don't forget this. If it's annuity due, well, it's annuity due, you have to be very 6620, yeah? So basically, this is the liability you start with. Levy interest on it. The implicit rate of interest is 10%. 10%. % of the opening balance, which is 66, 2,000. 2,000. Thank you very much. So actually what I will do on this table so that I don't confuse anything, this is what normally I do myself. I will write all the years myself. This is what I do. So how many years do I have there? 4 years or 3 years? 3 years. Do you know why we have 3 and not 4? Because already we have paid. Whenever it's due, yeah, you've already paid something. You're going to pay 3 installments. So the 3 installments we have here, we have 20 what year, somebody? 662. We are paying 2662 every year. They're supposed to be 4 in installments, but now remember I had paid something, isn't it? 1 installment, which is out of the scope of this schedule. All right. Now, as a gentleman, one other thing that you're supposed to remember is that this installment, the installment has 2 components. Anytime you pay any installment to a bank, you are paying principal and what year, somebody? Interest. Every installment. Now that I have interest, I want somebody to give me the principal. So it will be, I only have 10 minutes for this class, we shall overcome. It will be installment minus what year, somebody? Oh yeah, they don't even want to make this a sudden formula. Principal will be interest. Will it be principal minus? No. Principal will be installment minus what year, somebody? Interest. So can you kindly give me the principal for the first year? It will be 62,000 minus the interest of 662,000, which will end up giving me what figure, somebody here? 2 million exactly. 2 million. That doesn't make me happy. That does not make me happy. This one here will be equal to 2 million. How about the closing balance? To get closing balance, we are taking opening minus principal. Remember, the loan can only reduce by the principal. Your bank can make a profit. So in this case here, for this one, closing, you take the opening, which was 20,000, you less the principal of 2 million, which will end up giving me what figure? 4620. Not very good for me, not nice. So then what do you think will be the opening balance in 2021? This closing here, isn't it? What to see. So of course you levy the interest on the opening balance, isn't it? 10% of 4620,000, which will end up giving us what figure? 462. Wanafunzi online si mmekuja vizuri, kumbe mnakuwa wazuri ya fara namna hii mko sawa sana. How about the principal? I will take the installment. I say minus the interest. 2.2 million. And then now the closing, I know I will take the opening for 620 minus 2.2 million. 2420. 2420,000. So this 2420,000 is what comes here, isn't it? Charge interest on it, which will give us 242,000. Yeah, 242,000. 242,000. So then come and give me the principal, 2662,000 minus 242,000, which will give us what here, somebody? 2420. 420,000. So meaning that at the end of the day, here when you take 2420,000 here opening minus this, it gives us what, somebody there? It gives us 0. I'm sure this is something that we want to look at later, but somebody has gotten some rough idea. It's about rough idea. It's about rough idea. So now, of course, we have the extracts. We have the extracts. We start with the profit and loss extract. This will go to the P&L as finance cost. There's a question there. As the principal amount. Okay. All right. Castana is asking a question. You know, for leases, you will be given. For leases, will be given. You don't have to do it the FM way. For leases, our installment will be the lease amount, 2662. That's normally given. But for AFM, we shall see when we reach there. For AFM, questions on loan amortization schedule, we must calculate the installment amount. Castana, I hope I've answered your question. Okay. So ya kwanza principal hii 2662,000. Principal amount is 2 million here. All right. And how did we get this 2 million? We took here, look at this formula. Installment is principal plus interest. Principal alone will be installment amount minus the interest. So we took, in this case here, the installment amount of 2662,000 minus the interest for this year. I hope, Kachana, because of that time, when you get another session, Kachana here, or even watch this video later, you'll be able to really appreciate this much better. So we go to the financial statement extracts. Extracts, of which we start with the P&L extract. So we have the year 2020, 2021, 2022, 2023. Remember, this is for the year ending, year ended. All right. So we start with the finance cost. So finance cost, what do we have there? We have the figure, isn't it? The interest amount for the first year, how much do we have there? Nothing, Nothing. Sure. Because you see, we are looking at, we are starting from 20R. I'm the one who is confusing here. So here, actually 2020, this is when we began. For the year ended, you see, it began from first, the date there. It was, it's supposed to be, the list started from 1st of when? Is it July or something? First of July, 2020. So the first day is supposed to be ending on when? 30th June, 2020, 2021, isn't it? Yeah. So this actually is not even supposed to be there totally, No. The schedule is okay. It's only this one year. Year ended. Year ended, yeah. Okay. So 2021, how much is the finance cost? The first year? 662, 1,000. 2022? 462,000. 2023? 242,000. Now you're supposed to have 2024, isn't it? Which is what year? Somebody there? 0. The finance cost or whatever. How much do we have here? The last year finance cost. So, so there are only 3. So we have here 242,000. Okay, let's just finish here. How about depreciation? The first every year, 1366,000, this one is 1366,000. 1366,000. And then, of course, we have 1366,000. Yeah. So then what is the P&L charge? So then you can now add the 2. This session needed more time. This session needed more time. And then, of course, we come to the statement of financial position. Extract. All right. So statement of financial position extract. We have our ROU. Assets. Carrying amount. Very easy. We would rather use this language here, year ended. So year ended, we have 30th June, 2021. All right. We have year ended 30th June, 2022. 30th June, 2023. 30th June, 2024. All right. So give me the cost of the asset. The cost of the asset is what we got as the ROU. Was it 95.62? Oh, they have forgotten. This doesn't change, The cost of the asset normally remains the same. And then you come and give us a column for accumulated depreciation, isn't it? So do they still remember what depreciation amount was? 1366. So of course this will be 1366. This will be 36,000 times 2. Are they also getting the same 27,000? This will be 13,600 times 3. 98,000. This will be 13,600 times 4. 54,000. Then come here and they give me what we call the carrying amount. So now you take the cost minus accumulated depreciation. Is there somebody who is able to give me this very fast? My next class has begun. Unfortunately, I even needed a break to take some tea, right? We shall overcome. 81? 96,000, yes. So you take this minus this, 68,30,000. You take this minus this, 64,000. We take this minus this, which will give us 0, Are you sure? 98. 95, 98. 98. All right. So I believe, ladies and gentlemen, remember, of course, not even many students will be able to reach here. I believe with whatever we have been able to do, you guys have gotten something that can be of help to you when you get a question on leases. When you get a question on leases. All right. And of course, I'll be able to do another question in our subsequent class, which will come next week on Sunday, same time. But now we need to increase the time. Today, I think I've rushed a bit. We'll need to start and say at 9:30. Yeah? We need to start at 9:30. That would really be good. Otherwise, it's been lovely hosting you this morning. See you in advanced financial management. Bye-bye. Bye.